Good morning, everyone, and welcome to today's webinar, Top 4 Ways to Originate More Loans in 2019. I see that we have a lot of traffic of people logging in just now, so we're going to get started in just a moment. So please bear with us while we give them a minute or two just to log in. Thank you. All right, good morning, everyone, and welcome to today's webinar, Top 4 Ways to Originate More Loans in 2019, brought to you by LendSure Mortgage Corp. Today's speaker is Rick Harway, our Regional Sales Manager. Rick, take it away.
All right, thanks so much. I appreciate that, Rose, a great deal. Today we're going to talk about, if we want to jump into the agenda, Rose, we're going to be talking about a handful of things that I think will be really valuable for all of you in attendance today. First of all, just going to briefly highlight LendSure Mortgage Corporation and give a brief overview of our history. Then we're going to jump into market opportunities to grow your business, specifically expanded offerings, different ways to market, to help you tap into maybe some markets that might be ignored, foreign nationals specifically, and then also marketing to property investors, that there's a growing market out there available to be able to help you grow your business. And that specifically highlights some of the niche things that are available or exclusive to LendSure. There are a number of things that we do that are very unique in the marketplace, and we want to make sure to highlight those for you. And then obviously talk a little bit about our pricing, and then we'll conclude at the end of today's presentation with a question and answer session. I did want to remind everyone that available throughout today's webinar, and to keep us on time, we're going to encourage you to use the chat feature available in today's webinar to be able to send in your questions throughout the presentation. Rose will compile a list of questions, and we'll be answering those at the end of the presentation. And I think we've already got a handful of questions in already, so please keep the questions coming. We want to make sure to answer any and all questions that you might have. So moving forward and talking about a little bit about LendSure Mortgage. We're headquartered in San Diego, California, and we were founded in 2015. We do have regional centers, operations centers scattered throughout the country to service the different time zones, certainly in Ohio, Rhode Island, and Florida. We're very proud of 2 securitizations that we completed, one in 2017 for a little over $140 million. And then we had a securitization in October of 2018 for $240 million. And both of those securitizations are performing extremely well. Our management team boasts over 80 years of industry experience, specifically in this market space, and something that wisdom and experience helps us be able to provide some of the unique offerings that we'll highlight throughout today's presentation. And currently today we're lending in 34 states and have active applications going. I believe last I had heard we're in 3 or 4 additional states. So that number is very fluid and growing on a daily basis. So the different things that we do, moving into slide number 5, we focus specifically on just miss A paper borrowers. So borrowers that are probably going down to Wells Fargo or Chase, Bank of America, any of the major conforming institutions that would be available today. They have extremely strong credit, no shortage of cash flow, but documenting their income is typically rather challenging. They don't utilize traditional methods, i.e. tax returns. They don't show all of their income there because they have multiple sources of income. So those are the types of borrowers that we specialize in, specifically bank statements, and we'll go into more detail about the different types of loans we can do, in addition to providing actual examples of loans that we've closed that are not going to be able, or we're not able to be closed at major competitors. And we'll walk through some of those details. Our average credit score is well above 700, and typically our loan to value In the two securitizations that we talked about just a few moments ago, we're just under 70%. So we're doing a lot of larger loan sizes for borrowers with incredibly high credit scores that typically cash flow extremely well, but they don't document all of their income. We also do borrowers all the way down to in the low 500s as well that might have had some credit challenges in the past and are now working their way out of those challenges to be able to rehabilitate their credit. And a lot of times they'll need financing, temporary financing, as well as they get their feet back under them. We do those loans as well. Some of the things we don't do government loans, and we don't do conventional financing. So FHA, VA, Fannie, Freddie, those are not the loans that you're going to look to bring to LendSure. Some of the things that make LendSure different, transitioning into the next slide, is that probably one of the more powerful things when you're doing these types of loans, a lot of times you're not sure if it's a loan that could even be done. And we don't want to waste anyone's time, certainly not your time as the originator nor the borrower's time going through the disclosure process only to find out it's a loan that we can't do. So what we do is we spend the time up front going through a complete pre-qual underwrite by one of the members of our underwriting team to give you a conditional approval prior to even submitting the loan for disclosures and ultimately moving the loan through to funding and going through all the different milestones that we need to go through. So if you can compile the basics or the foundational pieces of the loan, and this would be up to and including a detailed bank statement analysis as well. We'll go through and actually analyze bank statements or detailed complicated tax returns and let you know that the amount of income that we would be able to utilize in qualifying your borrower. This can be really powerful when out looking for a purchase transaction and not having to go in and say that it'll be pending a loan approval. We can have a full conditional approval for you up front. Again, the back end of our process as well with funding, turn times are incredibly strong, less than 24 hours. And probably one of the more powerful things that we like to talk about are our common sense exceptions. We have the ability to be able to make exceptions. About 50% of our business today that we're funding has at least one exception to our guidelines because, again, the loan makes sense and we feel it's a worthwhile credit risk. So something to keep in mind when you're thinking about sending a loan over to LendSure and contacting your account executive. So moving into the next slide, talking about non-QM for A-paper borrowers. Again, a lot of the borrowers that we extend financing to are people that are probably coming across your desk now, but you might not think that there's availability for financing out there in the market. The exciting thing is that while the industry overall is expecting a 35 to 40% constriction in 2019, specifically the non-QM market is expected to double or even triple in size this year. So if you're looking for a way to keep your pipeline growing in a market that is otherwise constricting, non-QM is certainly the place to be looking. One of the other things that's encouraging is as overall as interest rates are rising, I don't think it comes as any shock to anyone that there's expected to be multiple interest rate increases by the Feds this year. The difference or the spread between a conventional loan or traditional A-paper loan pricing and pricing available in the non-QM space is not going to be that significant. And that fact alone will make it a little more palatable to your borrowers to be able to consider this is a viable financing option for them when out there looking for loans. And statistically speaking, a number of industry periodicals report that only 1 out of every 3 loan officers are currently originating non-QM loans today. So that would suggest that 2 out of every 3 of you on the phone probably are not even looking or funding these types of loans. So again, a really good way to be able to keep your pipeline moving in a positive direction and increasing your income as you move into 2019 and being able to overcome the constricting market that we talked about. Moving into the next slide, we wanted to talk a little bit about some of the specific things that we do with our just miss agency loans. We offer higher debt to income ratios. We can also entertain loans that have mortgage delinquencies, and certainly different property types, non-warrantable condos, and properties with extensive acreage are loans that we can entertain and fund on a consistent basis. Multiple sources of income is probably one of the more powerful things that we can make available, whether it's using multiple bank statements, specifically business bank statements and personal bank statements blended together to be able to derive an income figure to get the borrower to qualify is incredibly powerful and something that is unique to LendSure. Transferred appraisals certainly are accepted. We realize that sometimes we might be plan B, that you might have tried to close the loan through a different lender, and only once you've exhausted that option will you consider alternative financing, and that's where we'll factor in a lot of times. So transferred appraisals are not a problem. And then if you've had a significant credit event, or your borrower has bankruptcy, foreclosure, short sale, loan mod, etc., those are things that we can entertain with as little as 3 years seasoning. Occasionally even can entertain exceptions to that as well. So things that you'll want to consider before you pass on a loan, making sure that you're reaching out to your local account executive and inquiring about the loan scenario that you have. Specifically, as far as how to market and originate this type of business, I would go as far as to suggest that most, if not all of you, are already networked and have strong referral sources with the sources that are going to be able to facilitate introductions to these borrowers. The crazy thing is that by 2020, the self-employment market, borrowers that are going to classify themselves as self-employed, is going to increase to 42 million people. Those people all network or have relationships with realtors, contractors, property investors, attorneys, etc. And those are probably sources that you're getting your current business from today. So making sure that you're educating those folks and marketing to them and informing them of the new loans that you can now make available to their contacts and be able to even cement that relationship further can be really powerful. We're going to highlight some tools at the end of today's presentation that can help facilitate that process for you and hopefully strengthen those relationships even further. Here's one example of a loan that we closed just a couple of weeks back. We had a borrower that was a W-2 employee for a consulting firm, and specifically it was consulting for gas station owners. And then about 15, 16 months ago, the borrower decided to transition and go open his own gas station himself. He obviously had expertise in the field, but had no history of owning his own business, nor being or owning a gas station specifically. Borrower could only provide 12 months worth of business bank statements to support his income. No taxes were filed under the new company yet. The borrower had a 770 FICO score, and after we closed the loan, had 6 months reserves. The borrower was liquidating or selling the current family home and buying up, given a significant increase in income. So they had plenty of reserves in the bank given the equity that they had in the sale of the current family home. And LendSure was able to close this loan. We closed the loan at 80% loan to value. The borrower had gone to 3 different major banks and couldn't get an approval given the less than 2-year self-employment history and no tax returns being filed, but was able to come in with 20% cash down, again, utilizing or leveraging the equity from the sale of the current home. And they purchased a home for $720,000, and again, having 6 months in reserves after we closed escrow. So not a loan that you're going to find certainly every day out there in the marketplace, but ones that will come across your desk. And the loan officer was ready to tell these borrowers that this loan couldn't be closed, that no one will be able to do it short of it going private money. But we were able to step up, make the exception for less than 2 years self-employment history, close the loan, and again, make the loan officer look like a rock star to his borrower as well as his referral source. So something to keep in mind, that if you have a loan that might look somewhat similar to this, to reach out to your account executive at LendSure to see if it's something that we can help you out with. And moving into a little more detail about our bank statement programs, the upfront evaluation of the income is really powerful. Obviously, we don't want to waste your time nor the borrower's time again in going through a 1 to 2 day process to get the loan uploaded, get it disclosed, then finally put it in line for underwriting, only to find out that there's not enough income in the bank statements, or there's too many transfers coming through and we can only give you X amount of income versus what you're coming up with. We don't want to waste your time with that. So the upfront income evaluation of for these borrowers specifically with more complicated income is incredibly powerful. P&L statements aren't required. We can do bank statement loans, whether it be business or personal bank statements, up to 90% loan to value with no MI, which again can be a little more attractive financing option maybe to some of the other more traditional options out there, whether it be conventional or government. Borrowers don't have to be 100% owners of their own business. Multiple bank statement accounts are accepted, as we touched on earlier. And probably one of the more powerful things, and we'll provide an example here in a moment, but is a variable expense factor. A number of our competitors provide us or utilize a one-size-fits-all approach, whatever that percentage is. Maybe it's a 50% expense factor, or 40 or 35, as a number of our competitors utilize. We take a deeper dive into the borrower's business by asking them to complete a one-page questionnaire. It's about 10 or 12 questions. Should only take them probably no more than 10 minutes to complete, but it gives us a better sense for the way that they run their business. And by utilizing that, we can ascertain what the borrower's expense factor is and be able to come up with a reasonable income for the borrower's self-employed business. And moving into the next example, some of the things, again, going through the differences between LendSure and other lenders in the marketplace are we are the only lender in the marketplace that'll allow you to utilize multiple bank statements for the borrower to be able to qualify their income. We do not require a third-party expense statement to be completed. The minimum expense factor that we'll utilize is 10%. Most other lenders in the marketplace won't go below 35, and that's a huge difference there and gives you a competitive advantage in the marketplace. We'll do 90% loan-to-value loans utilizing bank statements. Borrowers don't need to be the sole owner of the business. They can be partial owner. And again, we can give them partial income for business bank statements and utilizing that. And last but not least, we will entertain loans with NSFs or overdrafts. We can be really flexible with that case by case. Sometimes those can be explained. With a number of our competitors, that's a major hurdle to be able to overcome, and a number of those lenders won't extend financing to borrowers that have NSFs or overdrafts. So moving into the next slide, and to give you a specific example of the variable expense factor, we closed a loan in January for a borrower that was a 24-month business bank statement loan. The competition used a 50% expense factor, again, the one-size-fits-all approach. This borrower was a truck driver for 15 years. The file was just before CTC on a purchase transaction, and the other lender came back saying, we can't make the debt-to-income ratio work now that we understand what the expense factor is. Needless to say, it put tremendous strain on that particular loan officer, with two realtors that were both referral sources for this particular loan officer, not to mention the strain that it put on the relationship with the borrower. We were able to make the loan work by simply asking for a letter of explanation to understand in more detail how the borrower managed their business expenses. Part of that explanation was a letter signed by the owner of the business that he contracted out for, the borrower that is, confirming that the contracting organization paid for the borrower's gas and insurance, which is obviously a significant expense for someone that drives a truck for a living. We were able to reduce the expense factor as a result of this down to 10%. Again, that's a 40% spread from what the competition was able to do. We were able to make the debt ratio work and close the loan as a purchase at 80% loan to value. So again, huge difference here, in what the competition was able to do. And thankfully, we were able to close that loan in 11 days from origination to close, because it was a complete package that was ready to close at the competition. So again, a way that we were able to come in, take a step back, looking at the loan, and realize what was available out there and being able to make the loan work. So, lastly, just a reminder: if you happen to have a loan that's stalled or running into a roadblock with your current lender, you certainly want to be reaching out to your LendSure account executive and running the scenario past them and letting know what all the hurdles are up front, so that we can see if it's a loan that we can make work for you. One of the other areas too that we wanted to focus on, we touched on this early on, is targeting the expanding property investor market. There's a huge growing market out there of property investors that might be an opportunity for you to be able to continue to grow your pipeline, and again, overcoming that more traditional constriction in the marketplace for borrowers that are just purchasing a primary residence. Certainly the cash out refi boom is long since gone and no longer available. So we need to start getting creative with the ways to be able to grow our pipeline. And again, property investor markets is a good, or the property investor market specifically is a good way to do it. It's a newer market. There's not a ton of traction or relationships for folks that are out there. So this is a good opportunity for us to be able to go out and start to develop those. There's not enough single detached homes available to purchase today, scattered throughout the country. So there's a number of people that are buying some different types of properties. And with raising mortgage interest rates, as well as the housing market uncertainty, there's a number of people that are looking to go out and make investments into real estate. Number of younger buyers, millennials, if you will, are primarily focused on their career right now and not willing to buy. So the folks that are out there buying homes for these people to rent are going to be the property investors. And just overall, there are buyers that won't buy due to mortgage financing restrictions, or they don't think that they have the eligibility to find financing available out there in the market. We've talked a little bit about that today. And there certainly seems to be a significant movement, too, of people going in and buying older urban homes in neighborhoods and then rehabilitating those homes. Heck, virtually all the programming on HGTV is built around those specific types of rehabilitation properties that are out there. There's a big movement. So at the end of the day, just trying to point out that there is a significant opportunity to be able to tap into the property investor market to hopefully be able to help you continue to grow your pipeline. And some of the things that we do that are unique within the property investment area or the lending market, there's no caps on the number of properties that are financed. So for a particular borrower, so if you happen to find a borrower that is a significant property investor, and that a number of lenders will only allow people to have 5 or 6 properties and extend financing to that specific borrower, we don't put a cap on anyone like that. We can also do up to 10 loans for any one investor. We've even entertained exceptions from time to time for very savvy investors that own double-digit properties. Those are things that we can entertain. We also allow higher debt-to-income ratios, as high as 50%. We can do unique properties for property investors, non-warrantable condos. Properties with acreage are things that we can entertain. We have a rate buy-down feature that's allowed, and we'll talk a little bit more about that here in a moment, but allows you to be offer a number of different dynamic financing options when entertaining our rate buy-down feature. We also have a very aggressive DSCR loan program that does not require ratios. And again, our bank statement programs for investment properties are second to none in the marketplace. So just some things to keep in mind when you're exploring investment property loans. When we calculate rental income specifically, I think all of us on the phone understand that Fannie Mae adds a negative rental cash flow. Excuse me, I kind of tripped up over that sentence there. But that they incorporate that into the borrower's monthly debt, and the end result is a higher debt-to-income ratio. At LendSure, and this is a significant thing, so I want to underline this point. At LendSure, we utilize negative cash flows and offset it against the income. So if you have, let's say, for example, a $2,000 per month negative cash flow, Fannie Mae, so virtually every other lender in the marketplace is going to incorporate that or include that as a line item as a monthly debt, just like they would a car payment, another property, or a second mortgage that the borrower might have. Where what we're going to do is we're going to deduct that negative cash flow from the borrower's income. And the end result is a significant reduction in the borrower's debt to income ratio, better interest rates, and ultimately more buying power for you to be able to offer to your borrower. It's incredibly dynamic. And if we click on it to the next slide, here's an example of what I'm talking about here. So you can see that this particular borrower had a net rental loss of a little over $2,300. And the impact on their debt to income ratio when incorporating in utilizing the traditional way that the industry does it, again, incorporating it into their debt, it pushed their debt to income or their total debt over $6,400 and their debt to income ratio up to 48%, pushing the threshold right of what most lenders will be able to offer today in the market. If you look at what LendSure was able to do over in the right-hand column, we deducted it from the borrower's income, thus leaving the total debt just over $2,900. And the end result was a lower debt to income ratio. In this case, was about an 18% spread from what the competition would do with a negative or a net rental loss or negative cash flow on a rental property versus what we were able to do. And out of 25 different examples that I've looked at just in the last 45 days, the average income spread that I've seen has been a little over 10%. I've never seen the spread difference be any lower than 8%. That's the lowest that I've seen. So this is a pretty significant move or different way of being able to view the same issue versus what the competition's doing. And the end result for you is, again, lower interest rate and more buying power for your property investor borrower that's looking to go out and make a savvy investment within the real estate space. So something to keep in mind. And here's a specific example of a loan that we closed clicking through the next slide. Again, we had a property investor that was interested in purchasing another rental unit and expanding their schedule of real estate. Major competitor had the deal using the traditional income calculation that we just talked about, incorporating the net rental losses. The end result was that their DTI was blown out and they weren't able to close the deal, and the deal stalled. And once again, putting significant strain on the loan officer's relationship. And I know for all of you on the phone, whether you're a loan officer, a broker, or a processor, you can all appreciate being in that predicament where you've got a loan that you think is going to close, and all of a sudden it hits a snag, and it puts significant strain on the referral relationship as well as that of the relationship with the borrower. What we were able to do is we were restructuring the file, utilizing LendSure Mortgage Corporation's unique way of analyzing the net rental losses, significant change and improvement in the debt to income ratio. Again, because it was a full package that had stalled at the competition, we were able to take that, send it in, get it pre-qualified, approved, disclosed, and ultimately funded within 13 days. And we only ended up missing the original close of escrow date by just a week's time. Once again, the loan officer ended up looking like a superstar to all the people involved because she was able to find a way to be able to make the loan work when they thought that it wasn't going to be able to go anywhere. You know, wanted to spend a little bit of time talking about the way we price our loans. We have two unique features when we price our loans, and we can utilize both of them in much the same manner. We price our lender paid compensation radically different than the rest of the competition. We also offer a rate buy down feature that works in much the same way, but a little over 85% of the loans that we close, and on average we're closing about $50 million a month. So by no means are we the biggest lender within the non-QM space, but we're certainly a formidable, sizable lender that is consistently closing loans in this space. And about 85% of our business closes utilizing our lender paid comp methodology. And what we do is we take our pricing and most of the competition within the space will take your lender paid comp or your broker comp and bake it into the interest rate. Virtually, it's pretty consistent that every lender out there will take a 100 basis point a 50 basis point rate increase for 1 point in lender paid compensation. So in this case here, we've got a 1.5% lender paid comp plan. Same interest rate between us and the competition at 6 and 7/8. This particular loan happens to be a $500,000 loan. The way we would close this loan is we would keep the rate at the base rate of the 6.875, and we would finance the broker's compensation, the $7,500. So the gross loan amount is $507,500, as you can see here in this slide. The competition, again, they're going to look to bump the rate 75 basis points. They're going to keep the gross loan amount lower at the original loan amount of $500,000, but utilizing our methodology, your borrower saves $205 a month, or a little over $2,400 per year, which is obviously substantial, and they don't have to come in with additional funds to close the loan if it happens to be a purchase transaction. Obviously, if it's a refinance with cash out, it's not quite as impactful, but still super powerful to be able to go to your borrower and say, I can close the loan and save you $205 a month, and or obviously a little over $2,400 a year. Not to mention the fact that the best part is the monthly payment is also lower, as you can see there at the bottom of the slide. So a really, again, dynamic way to be able to help you price your business out in comparison to the competition. And this can be a very powerful tool when thinking about ways to be able to close more loans and with you versus the loan officer down the street. And just a couple more bullet points here as we get ready to wrap up. There's a significant growing market in addition to the property investment market that we talked about earlier, but also the foreign national market. We do quite a bit of foreign national business from month to month. And a couple of things to point out here, that the foreign national market is over a $121 billion industry per year. And the other part of the foreign national market that's important to note is oftentimes the loan to value, or the loan sizes are quite a bit bigger. Again, these are borrowers that are making significant money, and they're oftentimes coming over here looking to purchase a second home. Maybe their business takes them traveling back and forth between their country of origin and coming over to the United States to, again, conduct business. And because they're here a significant amount of the time, they need a second home, or they just want to come on vacation here. Whatever it is, there's a growing market here that is available for us to be able to service. And some of the things that we do that are unique within the foreign national space is we have a highly experienced foreign national team that has extensive experience within that space. The account executive at LendSure can walk you through the process if you have a foreign national loan. We can utilize foreign credit. We don't have to have domestic credit. Is not required in order to be able to close those loans. We can do these loans up to 75% loan to value for either purchase or refinances. We accept income verification letters from countries without tax returns. So if you have foreign income documents, we can utilize those, and foreign assets can also be used for the reserve requirements. And again, visas are not required. We'll entertain loans for ITIN borrowers as well. So a number of things that are unique within this space to be able to, again, arm you with some additional tools to be able to go out and capitalize on some of the expanding markets that are out there today. And just a highlight here really quickly of the major products that we offer. We have 4 main products that we offer at LendSure. We offer a super prime product, or we also call it Alt-A. Expanded approval would be for borrowers that have maybe had some credit issues in the past, as well as higher debt to income ratio limits. Expanded investor, specifically for property investors. And then last but not least, as we just touched on a moment ago, our expanding foreign national program. So some things to keep in mind. And then for attending, our way of saying thank you for taking time out of your busy schedule and attending today's meeting, we'll be following up with an email, a copy of today's PowerPoint slides, so you can certainly go through any of the things that we talked about, as well as providing you a private label resource kit. It'll be comprised of a number of different documents that you can post on any social media site, an email blast that if you want to send out, and a number of other things that are all highlighted here, built around the products that we've talked about today. But you'll be able to put in your own contact information, your own company's logo on our marketing material utilizing these programs to hopefully be able to support you in going out and growing your business. And again, if you have any questions about how to utilize any of these documents as well, I invite you to reach out to your account executive one more time. I'm sorry for sounding like a broken record on that topic, but it's just really critical, I think, to understanding the way that we work, given it's not black and white at LendSure. There's a number of unique things that we can do that you really forge a strong relationship with your account executive and just leverage that and their experience and their access to the executive team at our corporate office to being able to help you get these loans closed. That concludes the material for today's presentation, so we just wanted to open it up for questions if there happen to be any. Rose, did we get a few?
We did, and if you have any questions now, please feel free. There's a questions little tab on the webinar controls. Please go ahead and type in your questions, and we will get to as many as we can. There were several questions about whether we will be distributing a PDF of the presentation. Yes, we will be distributing a PDF along with the private label marketing resource kit that only the attendees today will be receiving. So one of the questions is, what about LTVs for the points finance method? Still count as below original LTV? How do we account for that?
Very good question. I appreciate you, whoever it was that asked that. So if we look to finance, okay, thank you very much. If we look to finance or you look to take advantage of our lender paid compensation, it won't bump your pricing into the next higher pricing bucket. So it'll stay in the original bucket where you've priced your loan.
Okay. Eric asks, where's the best place for us to get all this info? Can we get a copy of the slides, guidelines on website?
I would answer that question, all of the above. Certainly, again, for anyone that registered for today's webinar, we will be following up with a copy of today's PowerPoint presentation, as well as all the white label material that we highlighted just a few moments ago. But certainly the website is also an excellent resource. And again, I'm always going to send you back to your account executive at the end of the day as well. So, if you need some help getting in touch with an account executive, you can certainly reach out through our website and reach out there and let them know or let us know that you'd be interested in getting in touch with an account executive. We'll make sure to have someone follow up with you immediately.
Okay. Dan asks, do you offer 10-1 ARMs and or 30-year fixed rate?
Yes, we offer a 10-1 ARM or 10-1 interest only, as well as a 7-1 ARM available. For the savvier borrower or investor, that's a very attractive product if they understand, when they understand what it is that they're signing up for. Still a number of borrowers today want to take advantage of the low interest rates available in the market. While they're not as low as they were, say 12 to 18 months ago, still historically speaking, and in comparison to where we were, say 5 to 10 years ago, rates are quite attractive. So a number of borrowers are still looking to take advantage of the 30-year fixed option, but definitely 10-1 and 7-1 ARMs are available and utilized by a number of our borrowers.
Belkis asks, do you lend to Venezuela, Argentina, and Colombia on our foreign national programs?
Yeah, anyone that would be available, we have the ability to, as long as they meet the minimum guideline requirements of the foreign national program. And again, I don't want to bore people with those details. If you have specific questions about an actual scenario, I would invite you to reach out to your account executive. But certainly we can entertain foreign nationals from those countries as well.
Beverly asks about our minimum loan amount.
We don't necessarily have a minimum loan amount. Certainly, if we were looking at loan amounts well below $100,000, those might be loans that we would not be as inclined to entertain on an exception basis. Our guidelines say that we like to keep loan amounts above 150,000, but I've seen a number of exceptions on common sense loans well below those figures. So again, if it's a specific scenario you're thinking about, again, would redirect you back to your account executive. But yes, answers that were, or loans that we make on a consistent basis.
Okay. Jason wants to know, what is your max LTV on expanded investor and bank statement programs for investment properties?
I'm sorry, what was the question one more time?
What is your max LTV on expanded investor and bank statement programs for investment properties?
That's a good question. I would need to get back to you on that. I don't know off the top of my head.
Jason will address that one after the webinar. I'll make sure that that one gets answered for you. And Michael wants to know, is your foreign national loan for second home and rental properties? How many units? SFR or 2 to 4 units also?
1 to 4 units. And second home or investment property, correct.
Awesome. Matthew wants to know if we have a weekly rate sheet and what our normal turn time is.
Yeah, rates come out once a month, and they're typically issued at the first of the month. Also, you can access our rate sheet on our website, and again, always reaching out to your account executive is always an excellent solution there. And then, I'm sorry, what was the second part of the question, Rose?
Sorry. Turn times.
Oh, yeah,
our normal turn times.
Yeah, turn time. So for the pre-qual process is 24 to 48 hours. Typically, it's more towards 24, but if you're looking for a guaranteed turn time, I'd always tell you 48 is a safe bet because we're always going to beat that. And virtually every other milestone throughout the process, it's 24 hours. So disclosures 24 hours, full conditional underwrite 24 hours, et cetera.
Awesome. And we're going to do just a couple more because of time. Beverly wants to know how our asset depletion program works.
How our asset depletion program works?
Yes.
That too is a good question. And let me, if I could get that person's contact information, I'd be happy to reach out to them and be able to walk through it. It's a little more detailed of an answer to be able to answer in this forum here. Probably would take a little more time to dive into that. So if you want to get their contact information, Rose, I'd be happy to reach out to them directly.
Okay, great. And then last question, Angela wants to know, how do we get your rate sheets? Again,
you could reach out to your local account executive, or you can access it through our website.
All right, wonderful. Well, with that, I'd like to thank everyone for joining us here today, and we will be sending out an email shortly with your resources.
Thanks so much for attending, everyone. Appreciate it.